Hi everyone, today let's talk about the Disney implosion. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Disney earnings came in pretty good actually, but the stock still went down 10% on weak guidance. And you can see here Disney topped estimates for earnings and revenues. Disney Plus and Hulu came in with profits for the first time ever. ESPN still reported a loss, but overall that was pretty good for them. And on this news, we see the stock sank 10%. Operating income jumped 17% for Disney. Again, this earnings was actually pretty strong, but the guide for the future was not great. And that is what is sinking the stock here today. In terms of subscribers, you can see second quarter they had 117 million subscribers, which increased 6% for Disney Plus, 1% here for Hulu, and then ESPN actually fell a little bit at 2%. Again, overall, pretty strong growth. You can see the earnings per share, $1.21 versus $1.10. Revenues just barely missing, so I guess they did miss on the top line by a little bit, but they beat on the bottom line. U.S. park revenues grew by 7%. International sales grew by 29%, massive there. And that's with higher prices in Hong Kong Disneyland. Looking at revenues, they mentioned it was 1% higher at 22.08. But just barely missing on that top line, like I said. We also see that the traditional business continues to lag. We kind of expected that. Linear TV is dying, and we have seen it for a long time, and that continues to be the case. But the question is, can they make up that loss in revenue with Disney Plus, as well as ESPN Plus and Hulu Plus, and all of the different pieces of intellectual property that they own? And so far, it seems like they potentially could with the growth in those streaming services and the profitability that they saw this quarter, plus the potential add of an ad tier, which has been profitable for companies like Netflix. So moving over to the chart, starting off with the monthly chart here, you can see it's been a pretty decent stock over the years. This is going all the way back here to 1984. It's run up. It was back around $1.77 during that time period. So it's gone up a lot since then for sure. It's been a very strong company, but since about November of 2013, we've been in this kind of sideways choppy price action. You can see during the COVID period, the stock went up a lot, all the way up to the 200s. And this was surrounding the hype around streaming. COVID was pulling a bunch of people into streaming. People stuck at home watching a bunch of TV. And then once that kind of faded and the economy started to open again, then we saw Disney pulling back. And now you can see we're back into this consolidation that we've been in for a long time. We saw this price for the first time in March of 2015, so almost a decade ago. And we are back here now, and it is falling once again. We had a pretty clean breakout here. We did establish a higher high, which is interesting. But now we've had 2 months in a row of bearishness. So far, 5% down this month, and it was 9.2% down last month. Momentum rolling to bearish, so medium to long time frame, definitely a bearish consideration. Probably wouldn't look for any long-term positions until that 200 SMA down at 85.89. You could find some support in here at the 21 EMA and the 9 EMA. That would give you a 96.66 potential support, but the 200 is a very solid level. Again, maybe an intermediate support there, but monthly momentum says this is probably going to head lower for the foreseeable future. And then looking at it on the weekly chart, you can see we are within this structure. We're right at this downtrend line, but RSI still bearish. Potential support here at 103.04, not expecting that to hold. You can see the 55 EMA on the weekly chart. That's at 95.07. Again, looks quite weak. Technically, the structure hasn't broken, but you can see we went straight from this trend line down to the next one. And this definitely looks like a topping pattern. Big move higher, big wick rejection high, slight consolidation support, and then the earnings catalyst pushing us lower. You can see it's already down a little bit pre-market here on the Wednesday session. And overall, I would expect this to break. Again, you can see some support here at that 103.04 area. Next one, 96.66. That's the high here from November of 23. And I would expect it to push to that level at a minimum over the next week or two. And then you can see the move on the back of that earnings. Massive gap lower on the day, 9.51%. It tried to break out going into the earnings, and then a massive gap down on the earnings day. Huge volume on that move. On the daily chart, maybe you find some support in the short term around that 100 level. But again, medium to long time frames, you would expect any moves higher to be sold, especially at this point with a clear lower low versus all of these previous lows going back here to February of 24. Just not a lot to like like about this chart. You could argue for some short-term oversold conditions if we get there. RSI is not quite there yet at a 33.9 on the daily chart, but it will get there. Maybe you see a short-term bounce, retest some of these levels, but eventually you would expect that to be sold unless we get a change of thesis on Disney, meaning that they come out with something that's going to shift the public perception of this. But right now, forward guide is weak, and people think that this stock is just expensive based on that guidance. Moving over to the tasty charts here on the monthly chart, you can see we are technically in bullish conditions, momentum bullish. We took out those ATR resistances. Now we're pulling back to an area of support. If it's going to do it based on this chart, you would expect it to happen now. You can see that 144 EMA sitting there at that 103.02 level, which is about $2 lower from current price. And then your ATR support on the monthly chart would be down at 80.71, which is right at these previous lows here from October and November. Overall, to me, this still does look bearish, but it is interesting to see the bullish conditions on the monthly chart. And then similarly here on the weekly, you're going to expect every lower time frame to be bullish based on the most recent move. Trailing stop here on the weekly, 101.36. So again, it's getting a little bit tighter. Need this area to hold right here, 105.08. is your 89 EMA in a similar region to the monthly 144, so right in this zone, super critical. If this area breaks, then you're headed to that lower ATR, which is back down at that 89.57 level, which we talked about on the previous chart as being important. You can also see momentum on the weekly chart continuing to roll to bearish. And then looking at that daily chart, you can see we are extended. So we went straight to that 144 EMA here at 104.02. Definitely bearish conditions here on that move down. We've actually been in bearish conditions back here since April the 12th. We got a big move down there and we've been in bearish conditions. You can see we almost retested that upper ATR going into the earnings and now we're lower. And this is what I talked about a potential bounce in the short term. You can see we're right at that bottom ATR band. With catalysts, you can usually overthrow it pretty decently, but eventually you do see some sideways choppy action, maybe a slight pullback. So if it's going to do it, we could see short-term bounces, but again, I would expect all of those to be sold. And you can see how these ATRs are starting to roll to the bear side, testing those lower boundaries. And that is typically not a good stock to be in if you're trying to trade it to the bull side. But if you're trying to short the stock, potentially sell some calls against it, could be a decent opportunity. Moving over to the options chain, you can see this did adjust to that option pricing. So we were down at 105, and you can see 83 cents. You can get about $1, 1% move for the at the monies for the Friday session. Again, I would be quite patient here. If anything, I would sell calls. I think it's probably going to head lower. It is a little extended in the short term, but ultimately I do think it's going to go lower. If you're trying to get into the stock for those lower prices, you do have to go out quite a ways. Let's go out to the 45 days, see what you can get there. Even with the 45 days, it's only 2.5% at $2.63. If you wanted to go to some of those lower levels that we talked about, there's not a ton of volatility in this stock. Based on the current IV, it's only at a 17 rank, so not a ton of volatility. A lot of the volatility came out after earnings. I would be patient here. If we see rallies, I think I would look to sell them, but at current price, you might see a short-term bounce. However, if the structure did break, I would look to sell some calls or potentially even short the stock outright. Let me know down in the comment section what you think of Disney. Are you looking to get into the stock, or are you being patient, or have you already shorted it? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.